Let's work on a flexible budget example problem. So our problem says Cook Company uses flexible budgets to control its selling expenses. Monthly sales are expected to range from $180,000 to $200,000. Variable costs and their percentage relationship to sales are sales commissions, which are 5%, advertising is 4%, travel is 3%, and delivery is 2%. Fixed selling expenses will consist of sales salaries of $40,000, depreciation on delivery equipment of $5,000, and insurance on that delivery equipment of $2,500. So we need to take all of that information and prepare a monthly selling expense flexible budget for each $10,000 increment in sales within that relevant range for the year ending December 31st, 2020. So we have all of that information over in the upper left corner. And then this is what our monthly selling expense flexible budget would look like. The first thing that we need to do is we need to fill in each of our activity levels, right? How much in sales? So we needed to create this flexible budget for each $10,000 increment within that relevant range of $180,000 to $200,000. So we have that there in each of our three columns. Now we can start looking at our variable expenses. So your sales commissions are 5% of your sales. So we'll take 5% of $180,000, 5% of $190,000, 5% of $200,000, and we find our sales commissions at each sale level. Then advertising, we're going to do the same sort of thing, except this time it's 4%. So we take 4% of our three different sales amounts, and we get $7,200, $7,600, and $8,000 as our three different amounts for advertising. Then travel, that's going to be 3% of our sales. So we take 3% of $180,000, 3% of $190,000, and we get these amounts. And then delivery expenses, that's going to be 2%. So we take 2%, and we get $3,600, $3,800, and $4,000. So we've found our four different variable expenses. Our next line is our total variable expenses. So we add those variable expenses up at each activity level, and we see that if our sales were $180,000, we could expect variable expenses of $25,200. If our sales were $190,000, our variable expenses would be a little bit more at $26,600. Now for fixed expenses. We're told that our sales salaries will be $40,000. Now, since they're fixed, that means that they do not change, right? So if you sold $1 million or if you sold $1, you would still have sales salaries of that $40,000 because that's a fixed amount. So that $40,000 can go across under each activity level. Depreciation, this is also fixed. It's that $5,000. And then insurance is another fixed expense at $2,500. So our total fixed expenses are those three added up, which will be $47,500. Now our last line for our flexible budget is for our total expenses. So we'll take our total variable plus our total fixed. So let's just take a look at that first column for the $180,000 sales amount. Our variable expenses were $25,200. Our fixed expenses were $47,500. We're just going to add those two together. That will give us our total expense amount. So if we do that for all three, we'll find our total expenses will be $72,700 if we sell $180,000 worth. If we sell $200,000, our total expenses will jump up to $75,500.